Hello everyone, welcome back to FX 20 Pips. Today is the 26th of July 2023. Time is now about 8:59 p.m. GMT plus 8. We are currently looking at the GBPUSD 1 hour chart. What I would like to do today is just to go through the trade for yesterday. Not actually a trade, but a trade setup. Alright, before I touch on the candles for today. So what I'm going to do is I'm just going to do the playback just to remove the candles of today, so it's easier to just go through it. Okay, now looking at the 1 hour chart, we have a mini trend line that I drew from here, 0.1, 0.2, and then extended up to here. This is the 8 hours major trend line, and we have the yesterday low, alright, and then the midpoint and the high listed there for the previous day. Alright, so and yesterday I drew the breakout buy and sell zone here. Alright, and let's go through and see whether we are able to take a positive trade yesterday. So looking at it, let's look at the time. Okay, if I put the cursor around any candles, I just want you to look around here and look at the time. Alright, now this candle, this white candle here, it is at 1 o'clock, and this is the Frankfurt open time at 2 p.m. my time, and then this is the London opening. So based on my theory of the first and second candle, so the first candle breakout of this breakout buy zone followed by the second candle. Now if you do a follow through here, you buy where the candle closed, alright, you will get a shock because the price then starts to go down. You might be relieved and think that alright, it bounced off this trend line, okay, went back up, and then the next candle it tries to goes up, and then once it goes back down, that's when you would most probably take the loss. So when you take the loss, okay, that is when you put your stop loss right here. Okay, even if you put your stop loss right here, you will get the loss. And then if you put your stop loss right here, you also get the loss, pick up by this one. Okay, now you will still survive if your stop loss is here, or if your stop loss is right here on the previous day low. Okay, so the point is, when it break out, okay, the second candle, when it closes, it went down, and when it came up, cross this top bit, would you be able to get 20 pips around here? So let's take a look. So we have here, okay, let's say if you're so quick, you took a buy from here and all the way to the tip, it is more than 20 pips. Alright, but if you were to just delay a little bit and wait until it crosses the top part, you still get 20.7 pips. If you were to delay a bit or waiting for it to cross the trend line, then you would only have 13.7 pips. So it is really up to your conviction how much you trust this type of setup of buy and sell zone. Right, then now as price comes down, okay, depending whether you take a small profit 10 pips or 20 pips here, if it did not, you had hit your stop loss here. So what could you be doing? You could just walk away from the chart and give up the day. Now what happened next is the price keep going down, and suddenly at about, what time is this? This is 9 p.m. So when the 10 p.m. candle stop, 9 p.m. to 10 p.m, and then at this candle, when Frankfurt close or London begin to close, you can see that price hit this breakout sell and start to reject, and then went up. Okay, how much did it go? So just a rough estimate from here, from the breakout zone here to the top, okay, is 61 pips. What is the top here? This is the 8 hours range top and bottom, right? Now if you manage to buy from here, okay, and then come all the way up here, that is about 92 pips. Okay, so we have 92 pips from the sell zone and 61 pips from the buy zone, which would have covered our initial losses. If you take the buy from here, you will have got your losses here, but then at the later part of the day it gives you back easily, all right, with this number of pips. All right, so stop loss location is very important. Okay, if you go for very tight stop loss, like if you enter here and you put your stop loss here with only about 2 to 3 pips, you have to expect that when it comes back, it might hit your stop loss here. Okay, like what I explained earlier on, the only time when your stop loss is not hit is below this sell zone. Of course, the price could also come down and hit it, all right, but based on yesterday, you can see that this would be a safer stop loss area, or even the previous day low. All right, so how do you enter here? Okay, let's go down to the 5 minutes. Let's put a line here so we know where we are. Okay, let's remove this one. All right, let's go down to the 5 minutes. So where is it? Yep, so we are about here. So this is 9 o'clock. 9 o'clock candles. Okay, at the 5 minutes came down, touches here, the sell zone went up, and this would be a very significant candle for you, isn't it? Right, a strong rejection here. Okay, why is it significant? Because it is at the top of the hour, 10 p.m. my time. All right, okay, so 10 p.m. this is also the start of the second hours of the 8-hour chart, right? Because the 8-hour candle, the new 8 hours candle, start at 9 p.m. here. All right, so that means that the 8 hours candle started here. The new 8 hours candle started here. It was a solid bearish on the first hour, and then from 10 p.m. onwards, my time, all right, instead of a bearish candle, it became a wick. All right, and then it formed a full solid bar on the rest of the hours, okay, as this candle move up. So if you are looking at the 5 minutes, if you overcome your losses here and you are observing the charts, this will give you a good indication to buy. All right, and where is your stop loss? Definitely here, okay, because this one went down and didn't go any further, and there was a rejection here. Okay, so these are some of the possibilities that you can enter, but if you miss this opportunity, then it's just gone. Okay, if you're not looking at the chart, so there's plenty of time to trade, right? Okay, so that is on the yesterday. Now let's go back to do the rest of the let's go back to the actual chart. Let's close this one. Yes, I'm going to exit. Okay, so let's look at this one. So this is no longer valid, so I'm just going to remove it. Even if I put it here, okay, I'm just squeezing, trying to force the trend line, which doesn't look good at all, so I just remove it. Right, let's go back to the 8 hours first. Let's look at our 8 hours chart. So again, for the past few days, the 8 hours range is still bounded by these candles. Today the 8 hours closed above, okay, on the previous 8 hours candle here. So now this is the new 9 p.m. candle. All right, and we got to see what it's going to do. Okay, whether it's going to come back here and then have some reaction or what. Of course we don't know. So the 8 hours range block will stay. We still have the P wave around here. Yep, so price is approaching the previous week midpoint. All right, so let's go back to the 1 hours and do our daily routine for the daily high and low. So let's move this to yesterday high was here, yesterday low was here, and let's look at the 50 plus 50%, which is just about here. Okay, we remove it. So we are back to today, where I then drew the buy zone based on this candle body and the top of the wick, and then this candle body and the bottom of the wick. So we have to sell, we got a buy zone. Alright, so what are we waiting for today? Looking at the news, we have the FOMC at 2 a.m. my time, which is about 5 hours away. Okay, anticipation of going up 0.25%. Yeah. All right, let's look at the Fed Watch tools. There we go. We have the 98.9% survey that is going to go up 0.25%. All right, the current is 500. They're anticipating to go up to 0.25 to go to 525%. Okay, there is a 1.1% chance of it going straight up to 0.5%. Okay, instead of 0.25. Now, I think, okay, my view, which means nothing anyway, that Powell could put a pause today in the next 5 hours. Okay, which is totally against this 98.9% and against 1.1%. I'm thinking he's going to give us a surprise and put a pause on here. Okay, for today, because he still have September, November, and December to increase it. Okay, and looking at all the previous economy data, most of it is in the negative region. Even Euro is in the negative region. The US data is in the negative region. Alright, so I'm thinking that today might be a surprise where there is no change in rate. That is my view, which again I want to repeat, it means nothing because 98.9% probability of increasing is there. Alright, which is also reflected by this. Alright, 0.25%. Now let's go back to the chart. What happens when the rates come in with an increase of 0.25%? I think it is going to either hit the previous day midpoint or hit the Monday opening. Alright, and then start to shoot up. Right? Of course, it could also go all the way down. Now, if the surprise news of no increment, then this one will go just a little bit and then shoot up, coming to back to the round figure. Okay, once it go past 1.3, then the next opportunity for the stop is 1.33. Okay, this will be taken out quite easily, I think. Let me go to the 8 hours. This is the one about here. All right, the tip of this. So let me just draw a line here. Right. So I think that would be the target. Right. Price to hit previous week high, go above here, breach this high, which is also the inside bar of a weekly candle, and then come up to here. Right, how many pips is this? This would be roughly 393 pips. Okay, I'm not saying that tonight with the news it's just going to shoot up. Okay, I think with the news, whether it's a 0.25 increase or 0 increment, it is definitely going to go down a bit. Okay, might hit the Monday opening, then to start going up here on Thursday, Friday, and even into next week. Okay, this will be the remaining 7 days next week target. All right, this is how I put the scenarios for myself. Okay, which it means nothing at all to the market. Anyway, the market do what it wants to do. Anyway, but that's how I do the chart. I give myself some scenarios. Okay, so yep, that is about what I want to talk about today. You can see that price is first candle broke above the buy zone, second candle broke above, but of course when we know the FOMC is coming, it shouldn't actually be trading today or even yesterday. Okay, this week it should be quiet. Also after FOMC, we will have the ECB interest rate for tomorrow. Then all these jobless rate. An important one would be the Japan interest rate. Yeah, Japan. Can you imagine if they raise the interest rate to 0.1 positive? Do you think that's possible? Well, we can only put some scenarios in here. If this happens, then it's going to cause GBPUSD, okay, to go up much more. Anyway, that's what I put myself in those scenarios. Okay, so I shall end here, and then like what I said, in 5 hours the rates will come in, and then 30 minutes later Powell will speak, and it is always what Powell says that is more important than the actual interest rate that is shown on the screen later on. Alright, thanks for listening. Goodbye.